So let's start with a quote. In this world, nothing can be said to be certain except death and taxes. Benjamin Franklin, 1789, in a letter to a French diplomat. All right, let's dive in. Permanent tax cuts. So some of the tax cuts that were made permanent that were previously set to sunset on January 1 of 2026. So the prior law lowered the rates at the end of 2025. Sorry, the lowered rates were set to expire at the end of 2025, and those were made permanent. So across all tax brackets, and that's indexed for inflation after this year being 2025, and expand the 10% and 12% brackets with an additional year of inflation adjustments. So we've got 7 tax brackets, and there they are: 10%, 12%, 22%, 24, 32, 35, and 37. And as a result of these changes, with the lower tax brackets being made permanent, it allows for certain opportunities to strategically manage income and consider strategies like, for example, Roth conversions while in those lower tax brackets. And so that would apply if maybe you've retired earlier than you're required to take those or start taking your required minimum distributions. So for that window of time, you are possibly in a lower tax bracket than you would be if you're taking your RMDs. And so you can take advantage of converting tranches of your IRA or 401k at a lower tax rate than you'll be subject to once you have to start taking those RMDs. Just one example. All right, some other permanent tax cuts. We increased the standard deduction. The prior law, some additional permanent tax cuts. The prior law had the increased standard deduction that expired or was set to expire at the end of 2025, and the personal exemptions were suspended from 2018 through 2025. Change with the passage of OBA is that we permanently increased the standard deduction, and we're permanently terminating those deductions for personal exemption. So here are the 2025 standard deductions: single and married filing separately, $15,750, married filing jointly, $31,500, and then head of household is $12,625. All right, and so the next change that we're going to talk about is that with the prior law, with the Tax Cuts and Jobs Act, we had that $2,000 child tax credit, and then it was set to be reduced to $1,000 after 2025. And then there was a non-refundable $500 other dependent credit that was expiring after the end of this year. So the change is that we are permanently increasing the child tax credit to $2,200 beginning in 2025, and that's indexed for inflation. And the index for inflation part includes the refundable portion, and that $500 other dependent credit is made permanent.